Give everybody just a minute to get in here. We're going to start this in 60 seconds. Make it 90. Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
yelling, give me the fucking money. Get the goddamn money printer out.
Great. The bounty cutter.
We're gonna be so fucking rich. Get the fucking money printer out. Ladies and gents, it's quite simple. GameStop right now. 1 second. All right. Had to make sure my dog wasn't barking. GameStop warrants. In my opinion, this means that shorts are royally fucked. The move here is potentially devastating for short hedge funds and market makers that are naked short or heavily short or sitting on synthetic exposures. We're talking failures to delivers, swaps, etc. We're going to break it down here step by step because this is bigger than the majority of people actually imagine. How is this different from the stock split or cash dividend in the past? And I'll explain that really fast. A normal stock split or a cash dividend does not necessarily expose synthetic shares because brokers can just journal, right? Put it in the system, fake entitlements. However, warrants are brand new securities that are created by the company. And they have to actually match up with registered shares in GameStop's transfer agent's books. As you can see here, I've got a notepad going, and I'm going to be putting this all in the notepad so you guys can see this. And I've itemized it in order to give you guys the most value possible. So if a short seller has created synthetic shares, we're talking IOUs, not backed by real shares, there is no mechanism for them to source legitimate warrants for those synthetics. And I'm going to hear from people is, we've seen this before. There was an original Gme Dividend, I think it was back in 2022. Going off the top of my head, if it was 23, please let me know. Pretty sure it was 2022. But that was determined by the DTCC because that was supposed to be a stock split dividend. And the DTCC gave short sellers a get out of jail free card. Okay, that's what I'm calling it. It's a get out of jail free card. And they got really lucky that happened because otherwise they would have been fucked at that very moment. Now, what we have here, GME is announcing, and you can see here right underneath me, I put it right there, a dividend of warrants to shareholders. And this means the following. Every registered shareholder of record will get 1 warrant for every 10 shares that they own. Okay, the transfer agent, not the DTCC's bookkeeping, is the one that is determining what is being received. So the DTCC will not get the opportunity to say, oh, okay, well, this is just a stock split. This is just this or that. The DTCC is not the one that is issuing the warrants. Therefore, what they think or what they want does not matter. So the DTCC is eliminated in this situation because these are new securities issued directly by GameStop via the transfer agent and not the DTCC. You understand, folks? This will actually force reconciliation between real and synthetic ownership. There's no question about it in my mind. Now, it's not financial advice. You should not buy, sell, or hold based on the information that you're hearing here. You should use your own due diligence, do your own due diligence, get a financial advisor if you need one. I am not your financial advisor. I am simply letting you guys know my thoughts on the situation. And that is exactly what I know to be true. And we have seen that we are basically looking at a crisis. I already put that in there. We're looking at distribution and settlement crisis here, folks. And I'll make this a little bit bigger so you guys can see it. I don't want to go too large. I don't want it to obstruct everything. I actually can't with this. So I just won't use the bulleted list. I'll just type it out here for you guys. Now, GameStop is expected to issue 59 million warrants. And this is important because they could actually be issuing much more than this. If real demand is higher because of synthetic longs, because of synthetic positions, because of brokers and market makers issuing synthetic shares and naked shorting stocks, they must scramble to cover by buying real shares by the record dates. Let me put my phone on Do Not Disturb because all of a sudden I am the most popular person on planet Earth. And if they don't, this is what we call phantom territory. All right. They're going to owe clients an instrument that does not exist. You could see how potentially this is going to be a massive problem. Welcome to the channel, my friends. Welcome to the channel. Maynard, is this different from Ape? Yes, this is incredibly different from Ape. This is not the same as Ape or the prior GME dividend whatsoever. Please listen to the first 2 minutes one more time in case you need further explanation, because it is very clear, and this is not directed at you, this is directed at everybody. If you're going to tell me that it's similar to Ape or it's similar to the previous GME dividend that happened in 2022, please re-listen to the first 2 minutes, because then you will understand that this is entirely different. This is not the same whatsoever. Now, there are mechanics here involved with the $32 strike price. All right, and each warrant equals the right to buy 1 share of GameStop at $32 until October 30th. What's up, Rather Be Skiing? Welcome to the channel, my friend. Hope that's not too loud for you guys. If it is, no, it's not very loud. That's good. So if the current price of GameStop at the time of the issuance is above that, and if GME trades above $32, the warrants would be deeply in the money. So that means that shareholders would exercise. And the reason they would exercise is because then they would be getting shares at a cheaper price. That would force GameStop to issue legitimate stock for cash proceeds. And what about short hedge funds? They will face a wave of new real shares entering the float at $32 a share. And they still have to deliver on the synthetic shares, on the synthetic shorts. Welcome, Chopstick Mafia. Let's take a look at the impact on shorts, naked shorts, and derivatives. All right, because it's going to be a big deal. Naked shorts cannot deliver warrants. Naked shorts cannot deliver warrants. Naked shorts cannot deliver warrants. You understand? This will expose them publicly. Okay? Synthetic longs, we're talking swaps, FTD recycling, the kicking the can of the failures to deliver over and over again, the swaps, the over-the-counter derivatives. All of this bullshit is going to come to light in one way or another. The clients are going to expect their warrants. But if their shares don't exist in GameStop records, we're going to see lawsuits. We're going to see forced buy-ins by broker-dealers against market makers and hedge funds and family offices and institutions and banks. And this is why I love that Ryan Cohen just slapped his dick on the table and said, not bad for a piece of crap retailer. I would say not bad at all, Ryan, especially since GameStop, the piece of crap retailer, just beat earnings per share. We're talking adjusted EPS, in case you're wondering. Adjusted earnings per share was expected to be at 0.16. They beat that by 56 fucking percent, ladies and gentlemen. 56% at 0.25. Revenue was expected to come in at $823 million for the quarter, and it beat it by 18% on top of that. $972 million for a piece of crap retailer, right? Their earnings per share is up 2,400% year over year, 2,400%. Their revenue is up 22% year over year. Their EPS is up 47% quarter over quarter, and their revenue is up 33% QOQ. This is a big deal, folks. And people need to realize that market makers and anybody who has internalized these orders and sold IOUs has to provide a warrant. Okay, they're going to rush out to buy real shares before the record date. And this could very possibly trigger a short squeeze. This could very possibly trigger a massive, massive short squeeze. We could see all of the rats fleeing the sinking ship out of a tiny doorway, trying to cram their way through. This is a potential plausibility. All right. And I'm going to explain why. Okay, why could this trigger a squeeze? Make this a little smaller. They have to close out, ladies and gentlemen. In order to meet their warrants entitlements, brokers and hedge funds must close out or source real shares. If there is a synthetic supply that is large, as we all suspect and have seen in GameStop, as retail investors have noticed that a ton of shares are direct registered, DRS'd, by retail investors. And retail ownership is massive. Institutional ownership is massive. Institutional short positions are greatly hidden and obfuscated through the usage of synthetic longs and naked shorts. These positions are hidden in swaps and offshore companies, because companies in the Caymans, companies in the East, in Europe, companies outside of the United States do not have to report their short positions to the Securities and Exchanges Commission. They do not have to report their short positions to the SEC because they do not fall under Dodd-Frank regulations. So in reality, the short interest could easily be 50%, 100%, 200%, 500% on GameStop. And we would not know the difference until something were to happen. Because the only reason we found out that it was at 140% back in 2021 was because Gabe Plotkin got sloppy and decided to directly short the stock. What else do? They create swaps. They fail to deliver. They short the exchange traded funds that hold the underlying stock of GameStop because that does not show up as short interest under GameStop stock. That shows up as short interest of the exchange traded fund. Therefore, they don't have to report it, and it doesn't increase the short interest of GME, and so on. I could explain this for another hour of how they do this, but I'm not going to right now. This video is about the warrants, about the dividend. This mismatch here is going to possibly force buy-ins into a float that is completely illiquid because retail owns the fucking float. Ladies and gentlemen, it really is supply and demand. And the expiration date here, October of 2026, is going to keep the pressure on shorts for a whole year. Shareholders can exercise at any time. Supply of shares, real shares, and warrants that is going to be very tight because there's only so many shares to go around. And if we have a bunch of diamond-handed people that are holding their shares and direct registering their shares with GameStop, then there are going to be a higher number of them. So if we have, for example, 59 million shares of GameStop DRS'd, and all next thing you know, there are now 180 million warrants issued, we're going to know that, well, 180 minus 60 is a lot fucking more than 100% of the float that has been DRS'd. Therefore, the only logical explanation is there is a fuckload of short positions out there. So GameStop is basically betting that the price of GME will be over $32 a share, significantly over $32 a share for the rest, not for the rest of the year, but by October 2026. And this is not dilutionary, okay? This is a distribution of rights. So a lot of people are going to wonder, hey, is this going to dilute my position? It's not going to dilute your position. I'll explain that why really quickly, how it's not going to happen. This is non-dilutive. It is a distribution of rights. The dilution will occur. The warrants are exercised. GME will receive $32 a share in cash up to $1.9 billion. Theoretically, they could receive much more if synthetic positions are found. What does that do? Strengthen GME's balance sheet. We're talking a showdown, folks, between real ownership versus synthetic ownership. Hedge funds, market makers cannot fake the warrants the way that they fake the book entry of shares. And in order to avoid being exposed, let me put this in a big way here. To avoid being exposed, what's going to have to happen? They must buy real stock before the record date of October 3rd, 2025. We're talking something that could potentially ignite one of the biggest forced buy-ins Wall Street has ever seen in history. Cody, I did not give you advice, my friend, but I'm glad to hear that you bought physical silver. Chris's Concert Corner says, I dropped $9,700 on GME just before close today, and I picked up 411 shares. Congrats, my friend. Giles, hello to you too. G-Bucks did something similar with these warrants, and short still shorted the hell out of the stock. Something similar is not the same, though, Drew. Something similar is not the same, okay? So I appreciate that information. They could short the hell out of the stock. Sure, absolutely. But G-Bucks did not have the amount of DRS shares that GameStop has. Did they even have any DRS shares? And who were the holders of that? Zachary says he's pumped. Let's go. GameHub says you likely don't receive the actual warrant. Instead, you get an entitlement, a placeholder that may or may not be converted to a real warrant, depending on how your broker handles it. Well, that doesn't really matter, GameHub, because the fact is that the transfer agent, meaning ComputerShare, is the one that is going to determine who gets warrants and who does not. And if you exercise that warrant, it does not matter. It has to be delivered. What does that mean? That means shares have to be purchased in order to be exercised, in order for them to pay you with, or should I say, to give you the $32 a share cost that you exercised for each warrant. Plain and simple. And people can still trade them, okay? People can still trade the warrants. So they will be trading, and they could potentially start going for a lot of money. My tube Premium 190 says this guy is delusional. Oh, I'm sorry, my friend, that you do not understand simple market mechanics. It really is okay. I get it that it's a tough concept, and I don't blame you for not understanding this. This information and this stuff is actually made to be very difficult and obfuscated for a reason. And people with an IQ of sub 75 usually don't understand it in any way. So if your mental capacity can't comprehend the reality of what we're looking at, I don't blame you at all. Unfortunately, your mom and dad probably dropped you on your head one too many times as a child, and now you're over here on YouTube trying to pretend like others are delusional because you don't have a simple understanding of the way that short squeezes work, of the true reality of what we've seen on GameStop. You haven't made the amount of money that people like us have made on stocks like GameStop and AMC. You have not seen your options contracts go up by 3,000, 5,000, 8,000% overnight the way that we have seen. And that is completely okay and acceptable. I do not understand the majority of people to understand these things. I do not understand people of simple-mindedness to be able to understand these things and really get a feel for what is happening, because the matter of fact is that nobody gives a fuck what you think about market capitalization or about market mechanics or about who owns this or who owns that. The reality is that the stock market is a gigantic farce. And what you think you see in the stock market is a lie. You only see the numbers that these firms want you to see. We only see the reported short interest. It is self-reported. And if somebody clicks a Y versus an N on a keyboard is the only real difference as to if something is marked short or marked long. And firms like Citadel and Virtue, JP Morgan, Goldman, and the list goes on and on and on, have for decades now, 4 decades, been cooking their books and fined by FINRA and the Securities and Exchange Commission and the Commodities Futures Trading Commission for cooking their books and illegally mismarking short positions as long positions. Not once, not twice, but I'm talking thousands and thousands of times. Folks, I think I've made my fucking point. I'm about to go buy some more GME. Well, it looks like my opportunity is in after hours is still available to me. I think I'm going to go do what I've got to do and do what I do best here. And man, I can only imagine what's going to happen to options contracts. Potentially nothing might happen. Potentially it might take an extra week, an extra month, an extra 6 months, 9 months, 11 months, and 29 days before something crazy starts happening on GameStop. It really might. There's no guarantee that this is going to happen by October 3rd. There are no guarantees in life, nor in the stock market. And any money that's put into the stock market should be considered gambling. It doesn't matter if you're investing into the S&P 500 ETF, if you're investing in indices, if you're putting it into NVIDIA, or AMD or AMC or GameStop or silver or gold or anything at all. When you're playing in the stock market, when you're investing money, you are gambling. People like to call it investing. They like to call it low risk, this and that. The reality of the matter is that you never know when a black swan is going to come and fuck shit up. You never know when markets are going to become greatly manipulated or diluted or have serious synthetic issues and naked shorts occurring in them that might take quite a while for you to recover. But if you have any understanding of the way that investing works, you would know that guys like Warren Buffett didn't become rich by buying and selling in a matter of days, weeks, or months. Warren Buffett became filthy fucking rich by buying and holding and diamond fucking handing. Cheers. I wish you peace and wealth. We're going to be so motherfucking rich. Oh yeah, who didn't know about that? Let's you know what? I'm going to show you guys one more thing before I go. Hang tight. Hang tight. Watch this, folks. You want to tell me this can't happen? Well, let me show you what just happened yesterday. A little company by the name of 8Co, stock ticker OCTO, OCTO, ran over 5,000% in a single day. 3,000%. My2 Premium does not understand the way that options contracts works, folks. He has no idea what options or call contracts can do. We're looking at here a stock that went from $1.25 to $82 in a single day. There are no options contracts on 8Co, but even still, people could have easily made 2,000, 3,000, 5,000% profits just from buying and selling shares on Octo. This was just yesterday, just in one day. $1.72 to $82 and change in one day. People want to pretend it's because Bitminer invested $20 million, which they did. Bitminer turned $20 million into $550 million. Very same thing could have happened to you. You could have turned $2,000 into $550,000 without a problem had you done the same thing. Now, obviously, that's a lot easier said than done. But the reality of it is, not even using leverage from options contracts, buying and selling shares of heavily shorted equities can make people 3,000, 4,000, 5,000% in a single stock. How do you own the float when you're playing options? People still own shares, dumbass. You're fucking retard. Oh man, that's an insult to retards. Cheers, ladies and gentlemen. Say hello to the shills. Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
cowboy, give me the fucking money. Get the goddamn money printer out.
Oh, great.
that goddamn money printer out.